the 19th. I'm delighted to be joined today by Osama Rizvi, who is Energy and Economic Analyst at Primary Vision Network, Mr. Jay Maru, Head of Market Intelligence and Analytics at Vortexa for the MENA region, and Victor Yang, Senior Analyst at the ALC Network Technology. Thanks for joining us, gentlemen. Victor, I'd like to start with you, please, today. There's our survey from yesterday, actually, which asked what would be the greatest, what's having the greatest underpinning, holding these prices today now, again, around the $90 mark. And China demand is dominating there, supported by the Saudi unilateral cuts and then China GDP outlook. So China, seems to be, giving that, lending that support still. Obviously, the demand is still there, but of course, you're aware of the question marks over how strong that's been and how long it's going to last into next year. So give us a bit of an outlook. Now that we're in the fourth quarter, what's your outlook for the remainder of the year for average demand for different products and crude imports, and the outlook for 24 as well, in terms of the likely impact from any stimulus in the government on consumer demand, etc.?
Yes, good morning, everyone. And when we come to demand from China, there's been a lot of talk earlier this year about demand being weak. But when we look at the data, it's not that weak as said. They say it's weak because of the high expectations. So when we look at the country's crude imports and crude runs, say for instance, in August, in September, both record highs. I mean, the country's crude throughput, both record highs. And its imports has been, well, high about the record high earlier, reached in 2021 too. So, and as for fuel demand, when we look at September and October, it was already, gasoline, jet fuel, it was already largely back to the pre-pandemic level. And we look at the passenger transport during the 8-day holiday for the National Day. It was even above the pre-pandemic level. So it boosted domestic jet fuel and gasoline demand quite significantly. But diesel demand is still relatively weak because of the declining real estate industry. But for the last quarter, we still expect gasoline and jet fuel demand to be, well, say quarter by quarter, it will decline from September, August, because of a lack of holidays. But it's now basically back to the pre-pandemic level, not that much impact from the COVID-19. And
okay, so that's on the consumer front, if you like, gasoline, but you mentioned diesel, which is obviously more linked to manufacturing and an industry. And again, sort of, do you expect a pickup in that? That has been lagging anyway behind other products. Do you expect that to pick up? Has the stimulus in the government pushed that at all? It's been supporting a bit the real estate sector as well. That might be helping consumers more than manufacturers. But again, looking forward, let's say to Q1 next year as well, in terms of any ripple effect, any stimulus that's been done so far might have on industry.
Well, on industry, the government announced an action plan in September about resolving the problem about overdue payments to enterprises, mostly private enterprises. A lot of payments that should have been made to enterprises, private enterprises, have not been made as scheduled as they have been. So the government is now trying to push for that. And as we said earlier, in some other podcasts too, local governments have been financially strained over the past 3 years. And now the government has now rolled out a plan to resolve the debt issues about local governments too. Say they are now issuing the financing bonds to solve the problem. Say Inner Mongolia was the first region to roll out this and has been followed by 8 or 9 Chinese regions and provinces. So we are now seeing these stimuli more policies coming out to boost investments, because when payments are made to private enterprises, they can make more investment, and this can boost the industry and then consumption too. So this is a major direction for the few months. Yes.
Yeah, so it's looking more positive as we roll into 2024, as these effects sort of start to have an impact, perhaps, as we roll on. There's a survey result from our Energy Markets Forum that we had last week in Fujairah about the sort of year of two halves. You know, and at the beginning of this year, everyone was saying that in the second half, a lot things would pick up, particularly pulled by China's recovery. And our audience there said that 42% of them said that we're going to kind of see a repeat of next year, again, you know, a repeat of this year, next year again, in that, you know, China's will continue to grow and demand obviously fuel, but it will not necessarily be the magic sort of bullet that suddenly, you know, has a huge impact on demand, but steady as she goes probably. And again, the debate is still out on the G7 economies and whether they will go into recession or not next year because of the central bank policy. Jay, if I could go to you and just talk a bit about, you know, more sort of current oil price market activity, if you like. You know, we're seeing the oil price around $90 steady, really. I mean, we've had obviously a lot of turbulence in the region the last week or two, which has moved that price quite significantly up and down, but it's sort of settled back in to that sort of range that it's been in the last few weeks. OPEC has reasserted that there's going to be no, you know, changes to its production policy because of the tensions we're seeing between Israel and Palestine, and Iran has threatened this and that. But you know, I mean, have you seen? Obviously, it's too early to tell. But what would your indication be, or your expectation be, of, you know, movement on the water and any disturbance to that going forward?
Thanks, Giada. So yeah, we've been looking at this issue within our analysis team quite keenly, and we did the analysis of potential impact on closure of Hormuz and what that would mean for oil flows. And obviously, the impact would be huge if it happened. We did estimates, and we see probably about 22% of global oil flow is affected by any kind of closure with Hormuz, and it's disproportionate on its impact on crude oil rather than products. But this is really a last resort scenario. It's in no one's interest for these straits to be closed, not on the producer's interest, not on the consumer's interest. So this is a very, very extreme case scenario that's been talked about. Now, the news that we've had recently from Iran about some kind of ban or restriction on exports to Israel, and that being shut down by OPEC, is probably something that's helped soothe some of the heat in the market when it comes to oil. However, when we look at it on the freight side, we see a slightly different story. And if we look at what's happening with freight rates, especially for VLCCs, the largest tankers which carry most of the crude around the world, they've risen and they've stayed pretty high as a result of the tensions that have been flaring. And what that means is, even though there isn't yet a strong dislocation in supply or restrictions in supply, the fear of this happening has added a risk premium to freight, and added a risk premium for moving crude on a spot basis.
Okay, thanks, Jay. Osama, just back to you. We've discussed, you know, quite often Pakistan's particular economic, you know, situation across the board, and obviously its sensitivity to higher prices, higher energy prices, should they materialize. What's the mood there at the moment in terms of any trepidation that we're going to see a spike in prices, if you like? So far, you know, it's stable. They're still high, obviously, for Pakistan as a big consumer, but steady as she goes. Any contingency plans that would come in or need to come in if we saw, you know, the $100 mark being reached?
First of all, unfortunately, there aren't any contingency plans, not that any I know of. There has been a renewed,
for example.
No. Yeah, nothing so far. There have been some renewed interest in importing Russian oil once again, but the challenge that we have discussed on ad nauseum basis now, the technical challenges, the diplomatic navigation of it, the very fact that Russian crude does not yield high-speed diesel, but yields furnace oil more, but we need high-speed diesel. So these are the factors that still remains a challenge for Pakistan in its successful, execution of this of the usage of the Russian oil. Apart from that, the economic outlook looks is as of the global economy, right? So IMF, if you look at the recent update of IMF for its world economic outlook, the global economic growth is expected to fall 1% from 3% this year to 2.9% in 2024. Within that, the developing countries face a particular set of challenges, always disproportionate in their magnitude and intensity from the global north or the advanced economies. We have huge debt to GDP ratios. The debt distress levels are incredible. Pakistan, along with Sri Lanka and many other countries, many countries have already defaulted. Pakistan is near the brink of a default if more money doesn't come in. We need $25 billion every year for the next 3 years to finance to finance the country. For next 3, that's $75 billion. So I'm looking at more IMF programs until unless I look at only one indicator when it comes to the health of the global economy, that is the Fed's monetary policy. So until or unless the Fed starts to unwind their highly aggressive monetary policy tightening, I do not see any relief for countries like Pakistan. And I don't think that is going to happen anytime soon, given the fact that core inflation still remains high, not only in the US, but in Japan as well, in South Korea as well, and in the Eurozone as well. So yeah, I think we'll have to wait until next year, maybe after the first quarter, to see what entails for Pakistan.
Okay, thanks, Osama. Victor, just back to you on the crude markets again. Just give us an outlook of Russian crude intake, likely Russian crude imports into China in the next quarter, and also just generally crude import expectations in light of what the product exports are going to be from China, quotas, etc. And we also have a headline I'm going to draw your attention to about Venezuela diverting barrels from China if the US continues to ease sanctions on Venezuela and could be looking for other destinations that are legal as opposed to being reliant on China to take its crude. So give us, your expectations for China's crude import policy going forward. More Russian crude, more Venezuelan crude, more, what's the outlook there?
Well, China already reduced its imports from Russia in September, and based on our shipping data, because the premiums had gone up quite significantly against other grains. And for instance, in the beginning of this year, the premiums of Russian export was about, say, minus $10 against Brent, but now it's been positive. So the premiums had actually jumped, and this has dampened buying interest from Chinese refiners, particularly independent ones. So we are seeing a decline in cargoes from Russia. As for cargoes from Venezuela, well, a lot are also coming in in the name of, say, heavy oil or diluted bitumen, mostly bought by independents. But as for in the future, when sanctions ease, it depends on, the acceptance of other countries too. Say if they are paying higher prices than Chinese refiners, that's possible to attract more cargoes. So it's still early to tell when you have been a larger buyer. Chinese buyers have been an important one for Venezuelan barrels, So in the coming months, it's up to prices too. Yes, if they are seeing much higher prices from other buyers, that's possible. Yes, that's possible. And
okay.
As for the countries,
Yeah, carry on. No, carry on. Yeah.
As for the country's exports, we see China had quotas on exports, and the remaining quotas on the last quarter are quite limited now. Say
Hmm.
for the last, based on the current number, the last 2 months, say for for November, December, only about 3 million metric tons each month, say for gasoline, diesel, and jet fuel. So this would be declining from previous months. And the government has no sign of releasing more quotas yet. So which means it has no intention to boost exports yet, just like last year, at the end of last year. So we are not expecting to see a large jump in its exports in the last few months.
Okay, and I mean, what's the inventory? What's the status of the inventory, crude inventory at the moment in China? How full is that?
Well, China will actually build up its crude stockpiles in the first 8 months. And I mean, importing more crude than it need. And in the first 8 months, also it built the crude stockpile by about 700 kbd. And now it is now processed more. I mean, in September, it processed more crude than it imports, than its production and imports. So it's actually started to lower its stockpiles in September. So we do not expect the country to import larger volumes of crude in the last few months, as prices have been quite high. So we expect a modest decline in its crude stockpiles in the rest of the year.
Okay, yeah, and obviously that's influenced by the price, isn't it? Because that has been on the higher side in the last few months.
Yeah.
Thanks, Victor. Jay, just back to you on again, I mean, looking at sort of crude flows and product flows also, but and any expectations in terms of, you know, on the downstream side, let's say, and how that might impact flows on the water. You know, Middle East refiners, a lot of new refineries opening up in the next few months. We've seen as a result of the Russia sort of reflows, if you like, of Russian crude and products that Middle East has been taking in and re-exporting certain products and taking advantage of those new ARB advantages, if you like. So give us an outlook, if you think, for that. Has the market settled into this, you know, new trade flows of, you know, we know where Russian crude is going. That's kind of the new normal. And how is everything else adjusting around that?
For sure. So I think one thing, looking at the oil industry for so long, you can never underestimate the ingenuity of oil traders when disruptions happen, and that's clearly happened with Russian flows, and they've found new destinations, new markets, whether it's Brazil, whether it's Morocco, whether it's the Middle East or Asia. We've seen those flows happen, they still happen, and in our view, they're unlikely to change anytime soon. But going back to your point about what's happening with Middle East supply on products, especially with the new refineries coming through, this is a key area for us to watch, and especially from a European perspective. Given that Europe is short of diesel, has been short of diesel, and remains so in the absence of Russian volumes, what happens with the likes of Jazan, what happens with the likes of Al Zour, what happens even with Duqm in Oman, all of these refineries are key in how quickly they ramp up and how quickly they can produce key products like diesel and export them into the European market. We've seen with Duqm, they've had some test runs, they've been exporting some products, they've been exporting some fuel oil, especially to the US. And so what that suggests to us is that they're not fully there yet, but they're definitely making progress towards that route. On Jazan, we've seen a little bit of a steady state issue. We haven't really seen the same level of diesel exports that we would assume if they were running at full capacity. So there's still more capacity to give, more exports to give on that side. And Al Zour, obviously we've seen in the headlines that yes, they've increased exports, but they've been plagued a little bit with refinery issues, unpredicted issues, maintenance issues. So that's another area of uncertainty there. So all of this feeds into this wider concern over what's happening with middle distillate supply going forwards. And especially when it comes to the winter, I guess that one of the key questions being asked by the European market is, do we have enough of this winter diesel supply, especially if we're not taking it from Russia anymore? And so the Middle East was thought to be provide a supplement for this, but so far the volumes have not been as high as they have been last year. However, on the same side of things, obviously there's more exports that have been coming from the US, and Europe has generally adjusted and become more self-sufficient in not relying in further afield diesel exports. And so the amount of diesel moving between European countries, that's increased as well. Yeah, so that's on one side when it comes to diesel. On the gasoline side, what we're seeing is a very different scenario. So on gasoline, we're seeing a lot of tightness in the Middle East at the moment. We're seeing cargoes come in from Asia. We're seeing cargoes coming from Europe into the Middle East because of refinery outages and because of this supply tightness issue that's happening over this winter period.
Okay, great, Jay. And I mean, Osama, so thank you so much for that. I mean, talking about winter, of course, gas and gas prices are on the horizon. They've been quite sort of muted because of plenty of supply, mild weather generally still across Europe and still in Asia, I assume as well. Osama, in terms of, obviously the winter prices to come, whether it's, diesel for business and manufacturing or gas, in terms of going into the street, how much sensitivity is there in Pakistan to that as we approach sort of the peak season, if you like?
So that is a very important question. For Pakistan, natural gas amounts to 38% of its primary energy mix. And as I told this on the forum as well, our electricity, one of the main raw materials, if you may, that goes into the production of electricity is natural gas as well. And 30% of that natural gas is imported, along with 70% of coal. So naturally, for Pakistan, the sensitivity in the natural gas prices and in the natural gas markets, actually something opposite is happening to the crude markets. The crude markets seem to be on the upside, but not really there. But if you look at the hedge funds and money managers data recently, crude ones dumped the fastest contracts in the last decade, while natural gas had the opposite effect because of the geopolitical events happening in the region. There are also concerns of Armenia and Azerbaijan conflict, and this feeds into the wider Middle Eastern conflict, and Russia is supporting, Azerbaijan. So, the gas markets are quite bullish these days. And for Pakistan, this is quite a concern. We already have seen our natural gas production falling since 1992 to 1993 up until now. LPG is also, the demand is 1.4 million tons, and we have only 870,000 we produce domestically. Rest of it has to be imported. As of now, I don't know, because in Pakistan is different, right? So what happens inside the corridors of policymakers, it comes only after it has happened, or maybe if it is very important. If the history of the past is any guide, I still am very apprehensive and I'm concerned about the fact that the government would be hedging their energy policies in this wild geopolitical age that we have stepped into. And naturally, winters are looking quite tough for Pakistan in this regard as well.
Yeah. That geopolitical chessboard is getting more complex.
Yes.
As we go along. There's our survey question for today, which is Saudi Arabia unilateral output cuts will extend through to the first quarter of 2024, especially as more non-OPEC supply expected. Agree or disagree? Obviously, they're going to be there until December, as far as we can tell. Obviously, it's a constant. They can change that anytime, Saudi, I suppose, but they've committed to the end of the year. And of course, in the new year, we have the whole quotas being rediscussed within OPEC+. But will the voluntary cuts that Saudi's put through, and indeed those that Russia's put through, continue? Agree or disagree, given that the sentiment is that supply is still plentiful. So agree or disagree? Let's get the results of that. Victor, talking about geopolitics, while we had the awful, disastrous events that are escalating here in the region, in the Middle East, Mr. Putin decided to go and visit Mr. Xi and support him on sort of revamping or his BRI Belt Road Initiative project, obviously more of a geopolitical message there. Putin, first of all, leaving Russia for the first time, as far as I know. How is that being read in China? And what's China's, does that mean, is it seen as a reassertion of China's sort of neutral support for Russia in its war with Ukraine? What's going on there?
Well, as far as I get from the reports, about 151 countries and organizations attended this forum. So as for Putin's, Russia, its visit is just we can consider it a regular one. And as you know, more and more countries are now joining the Belt and Road Initiative. And this has nothing to do with the, say, current situation in the Middle East. And so, their meeting does not concern that one. And it's basically based on future cooperation. And, this one is based on, countries who are willing to take part in this initiative and who are interested in this initiative. And we in China, people are glad that this Belt and Road Initiative work out well, because it benefits not just China, but also other partners too. So hopefully it will be joined by more countries to bring more prosperity to this world. So we hope this will be advancing better. Yes.
And is China, I think it was mentioned on yesterday's podcast, but just to get your point of view on it, in terms of the economic sort of challenges China's having, to an extent, the choices it's making on how it spends its money, etc., domestically as well, obviously with one or two sectors needing a lot of stimulus, has that in any way altered its approach to its external investment that it's making for its geopolitical reasons and economic, obviously?
Well, in some sectors, yes, they do need more stimulants. Yes, that's for sure, because the country still faces a lot of challenges. Now, say, not just the real estate industries, but basically the whole manufacturing industry, because, exports are still relatively weak and demand from the international market is not back to the pre-pandemic level yet. That's posed a great challenge to the country. So the challenge is now stimulating domestic consumption and the confidence in the future. Then people can spend more money. And another one is to enable enterprises to invest more in technological innovation and to solve the problem, the debt issues with them. Say local governments are indebted to them, so this issue needs to be resolved, and this is what the government is now trying to do too. Yes.
Okay, Jay, I'll go to you for the last word. Just kind of linked a bit to China, but talking about again, container traffic, container rates on the water. Let's just have a look at that survey result. Agree. Okay, so that's kind of a tick in the box for people feeling that there's lots of supply and that sort of Saudi will not need to do anything to change its current TAC, 88%. Of course, that could be disrupted by if regional events escalate, but hopefully not. So there's our pretty categorical result. So Jay, just to go to you in terms of sort of container traffic. Part of China, obviously, its economy is exporting, consumer goods to the States, right? And that's taken quite a bit of a hit because of U.S. economy demand. U.S. economy is still ticking along, but there is some consumer retreat, if you like, in expenditure. We haven't seen the central bank policy hit corporates yet, but that's to come apparently. But in terms of any indications there, Jay, that you may see on the shipping front, if you like, of traffic flow to and from those trading.
So on that point, one of the things that we've been looking at is the flow of oil tankers coming back from Asia to the Middle East and seeing what's happening there. And actually, there's a record level of VLCCs heading back from Asia into the Persian Gulf. And so what that suggests to us is that this restriction in Saudi crude exports, it's it's already somewhat alleviated from the August record level lows. It's picked up in September, it's picked up in October, and we see that trend likely to continue. So it's very interesting, the question that we asked the panel about what do we expect with OPEC plus policies going into next year. Yes, I think the policy to hold through to next year is likely, but the key word there is in the detail, and the key word there is voluntary. So at any moment, Saudi could produce more if they wish to. Saudi's exports have increased from August levels quite considerably, and they could continue to increase or at least stay at the same levels in response to what's happening with prices and in response to what's happening with concerns over supply risks.
Yeah, exactly. That extra capacity that has been created, if you like, throughout the year.
Okay.
Is really being attributed to the stability, let's say, in the oil price in the last week or two, that in the back of the mind of people who are looking at fundamentals even. Well, thank you so much to Jay, Osama and Victor today for joining us on the podcast. Thanks so much, everybody, and have a great remainder of the week. All the best.
Thank you.
Thank you.
Thank you.
Thank you so much.
Nice day.